What's going on, guys? Gabe here with Review Dork, and happy Sunday, Sunday before Monday. I know your tits are jacked. By the way, Trey, he sent me his address. So this is getting overnighted. I expect a video this week, buddy. Okay, so let's talk AMC, because this past week was as flat as we could have ever imagined. We go into the daily chart here, and we could see AMC just hovering along the 37.75. This number is marked red for a reason, and this is the number where shorts had piled in over 70 days ago. And guys, when we look at the Orchex data here, people jump on this channel or jump on Trey's channel or anybody's channel, and you hear us all reference 20% short interest. And I know a lot of you are like, well, yeah, I hear 20%, but I don't see the movement. Let's go ahead and break this down a little more and just give you historical reference. So what we're seeing here, days to cover based on 2 weeks, 10 days, basically 10 trading days. We see that this number is constantly going up. Currently 2.37. I expect this number to increase on Monday as well. But when we look at previous data points, we see that days to cover was 3.92 at its previous high before AMC began its marked move upwards. Now there's a lag and a delay, and if we look here at 3.71, there was a delay, and that was May 6. We did not see a move to the upside until about 3 weeks later. Again, there's a lag in this. We could go ahead and look at GameStop, and GameStop also had days to cover at 5.95. The higher the days to cover, the more likely the short squeeze. That is the point I'm trying to make. And again, we put this in reference. Days to cover 5.95, and that was January 4th. The squeeze began on the 26th, 27th at about a 3-week lag. We want to continue the upward trend on days to cover because short interest has already been ingrained as the ingredient, right? We know that anything over 20% is high and it's dangerous. A day to cover between 1 and 4 usually indicates strong positive sentiment and lack of interest from short sellers. A day to cover above 10 indicates extreme pessimism. So what we're shooting for based on empirical data is 4 or better. Short interest as a percentage of the float below 10% indicates strong positive sentiment. Now, short interest as a percentage of the float above 10% is fairly high, indicating the significant pessimistic sentiment. So, you're pessimistic about a stock, your sentiment is it's going to go down. And sometimes those things are rather, common sense, right? When we see a stock price just run up, and I talk about this on the chart, anything that exceeds a 45-degree angle on the run-up is not sustainable. So shorts look for this. And what goes up must come down, right? Like gravity. However, short interest as a percentage of float above 20% is extremely high. And that, you're just a maverick there. Right there, you are just gambling. And so where am I going with this? We talk a lot about how the apes are dumb money and they're literally gambling their life away and their life savings away. But the shorts are doing it as well. It's crazy versus crazy. Who will win? Well, it's a battle of attrition right now. Now, if you're unable to interpret the numbers and then you see the price action, you're being messed with psychologically, right? Over history, we had the New York Stock Exchange, the NASDAQ, and the Dow. Over time, it's been in a constant uptrend, which means that going long is far more profitable over the long term than going short. In fact, shorts cover on a much smaller time frame, meaning these guys don't want to hang out here very long. Now, let's go ahead and go to another short squeeze example. If you see a sudden uptick in overall number of shares bought, this could be a warning sign of a pending short squeeze. What we're seeing here is volume being very volatile, right? What we want to see is just that moment where people just go nuts and bananas and say, hey, we like the stock, we love the stock, we're just going to buy this up. Because you got to remember, short sellers are sellers who ultimately have to become buyers. Now, could this be the catalyst this weekend? We have James Bond breaking records for James Bond films with over $6 million in Thursday previews. The expectation for James Bond was $60 million over the weekend. And I would consider that a fairly strong showing. But what is my prediction for the week? We consolidated at this level at 37.75 over the past 5 trading days. But what we're also seeing here is that the MACD line and the signal line is pending a crossover, which means that we are beginning to enter another bullish cycle. Ideally, we would get confirmation from the RSI. RSI also plays a very big role in this short squeeze because AMC was able to maintain relative strength throughout the week, consolidating in this trend while the RSI was relatively weak. And when we say weak, we mean below 50. Above 50 means strength. So if we could see the RSI break above 50, and then we have confirmation with the MACD crossing over the signal line, and then we get bullish greens on the histogram, I could see AMC having a very bullish week. What would it take for AMC to squeeze? Because 37.75 is now our 801. Short sellers, especially institutional short sellers, they hedge their risks, right? And yeah, they're crazy. They're fucking crazy. But they have to implement strategy. There are checks and balances to make sure that they do not end up like the guys who got caught in GME. So you would probably have a limit order, maybe 5% to 10%, which means that at 5%, we're going to see some shorts covering at or about the $40 range. And then we could see shorts covering at or about the $42 range. That doesn't mean that other shorts do not enter the arena, because when we ran up to 72, we saw that other shorts ran into the arena. Now, before I let you guys go, tomorrow, you're going to hear about another stock running, and it's another short squeeze play. Well, no, those are pump and dumps. And we've seen this with the likes of CEI. We saw it with Clove. We saw it time and time again over the past 8 months on how so many other equities seemed promising on a Monday for severe distractions, but then a lot of people were hurt by Friday. Jumping in those plays, it's your thing, and you want to make money? Because yes, you could still make money. There's plays like CEI. I'm not saying to avoid. I'm saying to avoid if you don't know what you're doing. And it's apparent through the emails and the comments that I'm getting, a lot of people don't know what the hell they're doing. All they see, short squeeze headline, and they jump right in thinking they're going to get rich off of a dollar equity. Keep your greed in check and stay humble. We know what the play is, and we're going to hold on to this play. Just know what you hold, because we get days to cover approaching 3 and 4. That's when things start getting interesting. Very excited to see that. We got no predictions. We got no dates. This is Gabe. I'm signing out. Sprite.